Bismillahirrahmanirrahim. Dear student, today we'll start our next chapter. This is the 11th week of your course, and it is about financial markets. As what is financial market? Markets is a place where people come and buy and sell goods, and there are certain type of goods available in the market. So when we talk about a financial market, so financial market is a place where different type of financial instruments are bought and sold, and these are the markets which facilitate exchange of these financial instruments. What are the different types of financial markets, and what are the importance and different aspects of financial markets? We will discuss it in this lecture. So when we talk about financial markets, markets in which funds are transferred from people who have surplus fund to people who have shortages of fund. So what are the people who have surplus funds? There are many people who have excess earnings, and they want to save that earning, and they want to save that earning, but they don't know where to put that money in a very profitable way. And so in that case, their money is they put their money in in their closets, or they buy gold or any other thing. And in that case, these surplus funds are remain unutilized, and they don't play any part in the economy. On the other hand, there are people who have shortages of funds. There are people who have capability of doing business. They have ideas, they have skills, but the main problem they are facing is the shortages of fund. So the main purpose of financial markets is to facilitate these people with funds by taking the surplus fund from the people who have those funds, and provide those funds to the people who have shortages of fund, so they can utilize these funds in the best way, and to take part in the betterment of the country, or to increase the GDP of the country. So the main purpose of financial market is to facilitate transfer of funds from savers to the person investors. And in this way, these funds are transferred, so the main benefit of transferring of fund is that there would be efficiency of utilizing these funds, because the funds are in hands of those people who can better utilize those funds. And obviously it can play a positive role in the betterment of the economy, and it enable customer to purchase goods and improve their standard of living as well. Obviously this also help the different customer to purchase their goods and improve standard of living. There are many type of loans which are given to consumers, for example, if you want to buy a car, so leasing, you can buy that car with the leasing facility. Or nowadays the government has introduced home financing, and through that the people can buy their houses. So in that way they can improve their living. The main emphasis, or the main benefit of financial market is that it helps in improving the life and standard of living of the people of the country. Financial sector in Pakistan, first of all, commercial banks. These are the commercial banks which provide loans to different customers, or individuals, and businesses and households and many other people, and they provide a different loan of different duration, long term, short term, intermediate loans. Then we have development financial institution. Actually, development financial institution, also known as development bank or development finance company, is a financial institution that provides risk capital for the project of economic development, and it is mostly based on non-commercial basis. Then there are microfinance companies. These actually the companies which mostly provide loans to small and medium enterprises, like smaller companies in SME sectors. Then we have investment banks. Mostly these investment banks are involved in selling of bonds and securities of capital market, and mostly IPOs would be done with the help of these investment banks, like initial public offering. Then mutual funds are those funds which get money from different people, and invest that money, pool that money, and invest in that money into different financial markets. The main purpose of making the pool of funds, or collecting these funds, is that they want to invest in it in stocks and bonds, or different type of combination of stocks and bonds, and develop a portfolio in order to develop a portfolio in order to provide the return to their mutual funds holders. Then there are another is mudarabas. Mudarabas actually is a type of Islamic finance in which one party provide money, and the other party will put their effort into the business. Then stock exchanges are the exchange which are actually secondary market, in which stocks are being or shares are being brought and sold. Then insurance companies, mostly insurance companies provide risk coverage against accident, fire insurance, or your health insurance, and many other things. So these are the major participant of financial sector in Pakistan. So when we talk about type of financial markets, so we have a different type of financial markets. First of all, we can say is that is a money market. Money market is actually market for short-term loans. Like this, these are the market in which only short-term loans are provided, or instruments are being sold and bought. Mostly these are debt instruments, and they are there to meet short-term requirements of lender. Mostly if any business is there, so they can finance their working capital, or purchase their raw material, or different short-term expenses with the help of these money market instruments. And the most important participant, or most important lender of money market instruments, are your commercial banks. And in this case, the central bank work as a controller of credit, because all the activities of the commercial banks are governed by central banks. So these are the central bank is the controller of credit. Then when we talk about features of money market, the constituents of money markets are that we have buyers and sellers. In the market, we have plenty of buyers and plenty of sellers, and there's the commodity, that is the financial instrument which you are purchasing, and the price, that is actually the interest rate on which these instruments um, uh, are being dealt. Then another thing is that dealers of money markets, there are many dealers in the market. There are brokers, and they are actually making deals between the buyers and sellers. And there are different, it is actually a heterogeneous markets, that there are different type of instruments in this market. And this is actually a market of near money, and mostly near money, many assets are being dealt in money market. But the physical contact is not necessary, because you can allot a dealer or a broker which can buy and sell the instrument for you. The instruments of money market, there are different instruments of a money market. First instrument is call loan. Call loan is actually a loan for a smaller duration, which can be from 24 hours to or overnight to 7 days, and it mostly be given to the brokerage house, the brokers, or the people who need money for gaining for buying a security, or buying a security, and they want to gain a smaller profit for which can be for a shorter term duration, and they can make their investment and get that margin. And the main feature of this call loan is that it can be called back at any time, and it is actually mostly given by bank to their trusted clients. Secondly, we have treasury bills. Treasury bills are the government short-term securities, as mostly these securities are from 3 months to 1 year, and these are mostly these are issued on discount. These are discounted bonds, like they issue at a discount rate and mature at their face value. The third one is the banker acceptance. A banker acceptance is an instrument representing a promised future payment by a bank. The bank is accepted, and the payment is accepted and guaranteed by the bank as a time draft to be drawn on a deposit. And the draft specifies the amount of funds, the date of the payment, and the entity to which the payment is owned. Like, actually, the banker acceptance is the assurance by the bank. It is the security provided by the bank. Then we have third instrument is commercial papers. These are short-term securities issued by corporate firms, mostly to finance their short-term needs, like with their working capital and other short-term needs. Then we have a collateral loan. These are the loan given by banks or in other financial institution on mostly on movable property, or we can say on the raw material or any other thing, but these loans are given for 1 year or less than 1 year. Then we have sale purchase operations, or they can also called as repos. These are the instruments, or these are the securities which is being issued with the promise that the company will buy back these securities in some future time. Importance of money market, the money market plays a vital role in financing industry. Like, it's the market for short-term investment, and obviously it provide loans for short-term needs as well. So at any time the businesses needs money, they can go for they can go to money market and acquire loan and fulfill their need. Obviously it will be helpful in trade activities as well. People can get financial assistance in case of exporting or importing certain products. And not only that, the banker's acceptance will also provide a guarantee of the trader, and it will be helpful to trade with the traders in different countries and different cities. Then as these money market instruments would be helpful for profitable investment. Anytime businesses have extra money, or government institutions or individual have extra money, so they can invest that money into this money market. And obviously when the banks provide these short-term investment facilities, and so it can attract money from different people, and they can invest that money in the banks, which can increase the funds of bank and make them bank self-sufficient self-sufficient. Then there would be an effective implementation of a monetary policy, because the monetary policy is implemented through commercial banks. And then it encourage economic growth, because when people are facilitated by funds, and the funds are being transferred from saver to investors, so that would be a positive impact on the economic growth of the country. And it would be also helpful for government, because if any time government needs funds, they can issue their treasury bills, and they can get funds from the people and use that money. Then proper allocation of resources, because these the resources which are being underutilized, if the businesses are being facilitated with money, these resources can be utilized properly, because when the businesses increase, the people get employment, so the human resource would be properly used, the raw material would be required, the capital goods would be required, so there would be a proper allocation of resources when there would be a practical and an efficient money market in the country. Then the other market is your capital market. The capital market is actually market for intermediate and or medium term and long term loans, and there are majorly two types of capital market. One is debt market and the other one is equity market. In the debt market, the issue of debt instruments are done, and in the capital market, issuance of securities are done by different public limited company. First of all, we will discuss debt instrument. There are majorly four types of debt instrument. One is bonds, that are actually corporate bonds, then government bonds, then these are actually also called as treasury bonds, mortgages, and mutual funds. When we talk about corporate bonds, these bonds are bonds which are issued by different public limited companies and or corporations, and these are the debt instruments, and the companies pay interest on these bonds, and these are of different time durations. And the more duration of a bond will pay you higher interest rate. The second is your government bonds. These are long-term bonds issued by governments, and the government also pays interest on these bonds. Then we have mortgages. Mortgages are actually a type of loan which is being given on the security of immovable property, and these are also long-term loans. Mostly in USA, the mortgages are used for home financing. In Pakistan, these type of mortgages are developing, and with the government house financing facility, the people are now taking mortgages loan from Pakistani banks as well. Then we have mutual funds. These mutual funds are those funds which are being managed by a fund manager, and this kind of fund, all the money is pooled together, and this money is invested in a different type of markets. It may be the debt market, it may be an equity market. The major emphasis is that the fund manager who has experience, who have education in that, they want to diversify risk and increase the return for the mutual fund holders. The fund manager is actually a manager, and he get a fee for that. So these are different type of debt instruments. Then we have equity market, and in equity market we have two type of markets. And first of all, in equity market we have issues of securities. Securities are issued, and mostly these shares issued by public limited companies. And these equity market is of two types. First one is primary market, and the second one is a secondary market. The primary market is a market in which these securities are issued for the first time. That is called as IPOs, the initial public offering. When we talk about primary market, so mostly these securities are issued directly by the public limited company through newspaper announcement or through internet, or any other source. But nowadays, investment bankers can be used to sell IPOs for the companies. Then another second type of market is your secondary market. A secondary market is actually the stock exchange, where already sold securities are being sold and purchased. What is the role of a capital market? Because the capital market is the market for long-term finances. It actually provide long-term loans to investors, and it actually offer long-term securities, and it can also provide you investment opportunity for a longer time period. What is the role of a capital market? First of all, capital market is very helpful in mobilization of equity market, because equity market provide funds to different businesses, and if you have an efficient market, you can get funds from the outside the country, and that would be helpful in financing the businesses of the country. Then it can obviously help in taking savers and borrowers together, and transfer funds from the savers and give them to the borrowers. In this case, both parties will have a benefit. Then there are many saving incentives. You can go and invest in bonds. If you want to if you don't want to invest in bonds, you can go and invest in mutual funds. Or if you don't want to invest in mutual funds, so you can go and invest invest in securities or shares. Then because capital market provide long-term loan to different long-term loan to businesses, so it helps in economic growth of the country, and the growth is balanced, because these funds are being properly issued to different sectors, and as they are being done under the supervision of the supervision of the central bank, if they are being given by the government. So obviously there is a balanced economic growth, and if you have an efficient market, capital market, it can attract the foreign investor in your country, because they think that your capital market is providing good returns. So obviously it will attract foreign investors. And if the capital market is efficient, there is stability in security prices, so it has an impact on the businesses as well, which will give a benefit to the country, as well as the people who have invested in these securities, and the people who are working in the working, or the businesses who have issued these securities.